Bitcoin just broke through its all-time high, yet the market reaction feels eerily muted, like another Tuesday in crypto. No buzz, no fireworks. Altcoins are still buried 40 to 50% below their December peaks. The phrase Altseason feels like a relic, and the Altseason index is sitting at levels that scream bear market. Social metrics are basically flatlining, engagement levels not seen since deep bear cycles. And that's exactly why this might be the moment we look back on as the biggest opportunity of the cycle. With liquidity flooding into Bitcoin daily, it's only a matter of time before it spills into the rest of the market. Even though macro conditions aren't perfect yet, Bitcoin continues to eat up market cap at an insane pace, recently overtaking Amazon to become the 5th largest asset in the world. That alone should tell you something's different this time. So have we entered the banana zone, or should we brace for a pullback? Will macro turbulence shake the foundations, or will a Fed pivot launch crypto into the stratosphere? In this video, we'll break down everything from technicals to macro, from historical price action to on-chain trends. If that sounds good, give this video a like to support the channel and make sure you subscribe so you don't miss what's coming next. Let's jump straight into it. The orange man was the party pooper once again, as Bitcoin dropped from its all-time high of 112K on news of a 50% EU tariff. However, Bitcoin remains bullish on the higher time frame. It just closed another strong weekly candle above key resistance at 106K and is currently hovering near its previous all-time high. The price has broken cleanly out of prior consolidation and is now eyeing the next major level at 112K. What stands out is the strength of this move. It's occurring above critical zones that previously acted as both support and resistance, now flipped into firm support. The charts are loud and clear. Bitcoin and ETH both printed bullish weekly crossovers, signaling broad market strength. Bitcoin is firmly trading above its weekly supertrend line, a level that has historically marked the beginning of explosive upside moves. ETH is catching up, having just reclaimed its 200-day moving average, with RSI momentum flipping bullish on both charts. With liquidity rising and the macro backdrop shifting, the technicals point towards sustained bullish momentum. If Bitcoin holds above 106K, a push toward 112K and even 120K is very much on the table. If you've been following this channel for a while, you already know the drill. Bitcoin's price doesn't move in a vacuum. It follows global liquidity like a shadow. When monetary conditions tighten, Bitcoin slows down. When the world loosens up and liquidity flows again, Bitcoin thrives. Recently, Bitcoin has been tracking the global M2 money supply with a lag of about 12 weeks. The correlation has been impressively accurate so far. The model even predicted the March to October chop, the December pump, and the April dip. Based on the same model, there's a chance of a rally to 130K by July. Nothing is guaranteed, of course, but even rough tracking gives us useful insight. You can chart this yourself on TradingView. Just pull up the M2 money shift indicator on Bitcoin's weekly chart and set the delay to 12 weeks. It's all there. With tensions easing globally and M2 on the rise again, Bitcoin's strong run in March starts to make sense, but the macro isn't settled yet. The real question is, when does the Fed blink? The bond market just sent a massive signal. On Wednesday, the 20-year yield spiked above 5% and the stock market cracked. The SPX took a dive. Meanwhile, Bitcoin dipped briefly, then powered to new highs. That divergence matters. It tells you that while equities are tied down by traditional forces, Bitcoin might be breaking free. But let's not ignore why yields are rising. It's not optimism, it's fear. The bond market is pricing in something worse than a recession. Investors are nervous, and the Fed's reluctance to cut rates or inject liquidity is adding fuel to the fire. The market has scaled back expectations to just 2 rate cuts this year. That means high rates could stick around longer than most anticipated. Still, there's a twist. Bad data can actually be good for Bitcoin. If things get rocky enough, the government may be forced to intervene. Balance sheet expansion, treasury buybacks, even an emergency rate cut. All of that brings liquidity back into the system, and liquidity loves Bitcoin. Let's dive into the long-term Holder MVRV and take a closer look at what long-term holders are doing. Are they taking profits or still holding strong? Right now, Bitcoin is trading near its all-time high, yet the long-term Holder MVRV sits at just 3.3. To put that into perspective, when Bitcoin previously topped at 109K, the ATH MVRV had already climbed to 4.4. This metric is the ratio of Bitcoin's current price to the average price at which long-term holders acquired their coins. It gives us insight into how much unrealized profit these holders are sitting on. A relatively low reading like 3.3 suggests that long-term holders haven't seen extreme gains just yet, and more importantly, it means there isn't overwhelming pressure to sell. That's a strong signal that this rally might still have legs. In past cycles, we saw the ATH MVRV spike dramatically near market tops. During the 2021 bull run, it peaked around 12.5, and in the 2017 cycle, it reached an eye-watering 35 right at the $20K top. In comparison, today's reading looks modest, almost cautious. It implies we still have a potential for significant upside on the table. So what's ahead for Bitcoin and crypto? Historically, when Bitcoin posts green monthly closes in both April and May, June tends to follow suit. And so far that pattern looks to be holding. April was anything but calm. We had tariff tensions flaring up, bond market chaos, and recession sirens blaring across financial media. The doomsday crowd had their moment in the spotlight, but in the end the market shrugged it off and we closed April green. Now in May the narrative has flipped. We're hearing about peace negotiations, renewed trade cooperation, signs of cooling inflation, and upbeat GDP projections. That shift in sentiment has helped propel Bitcoin to new all-time highs. A move that's not just technical but also deeply psychological. When it comes to monthly returns, I expect this cycle to closely mirror 2017, another post-halving year. Back then we saw a green close in April, another in May, and ultimately only one red month. September, or as crypto veterans like to call it, Rectember. After that, the fourth quarter was explosive, with monthly gains of over 40% stacked one after another. Fast forward to now and the setup feels eerily similar. If we factor in current liquidity trends and the possibility of quantitative easing in late 2025, the pattern could repeat historical returns. Markets have largely moved past fear and are now scanning the horizon for the next big driver. And make no mistake, what's coming could reshape the landscape entirely. What makes this rally different is that it isn't being driven by retail euphoria or meme mania. It's clean, steady spot buying, not leverage. The capital driving this move is coming from deep pockets, institutional players, and even sovereign entities. MicroStrategy continues its accumulation strategy. Spot Bitcoin ETFs are absorbing supply daily. Altcoin ETFs may be next, expanding the funnel for institutional inflows. Meanwhile, in Washington, the mood has shifted dramatically. Pro-crypto legislation is advancing. As expected, the SEC under its new chair has taken a far more favorable stance toward the crypto space. Political winds are changing. Just 2 years ago, top US officials were openly calling to shut down crypto. Today, they're laying the groundwork to make America the global hub for digital assets. So how do you actually play this game? Personally, I like to keep things straightforward. No need to overcomplicate or overanalyze every move. This market thrives on volatility, and you can bet there will be more massive flash crashes like yesterday's tariff dump. The key is not to panic. That's exactly what the herd does, and that's how they lose. You also don't want to chase every green candle you see. That's how people get wrecked. Buying into strength without a plan. Instead, have a solid exit strategy and stick to it with discipline. Know your levels and know your plan. When the market pumps and everything feels euphoric, that's not when you start buying. That's when you start trimming positions, locking in profits, and protecting your gains. Be disciplined when taking profits during overextended upward moves. When the price is running hot, it's easy to get greedy, but that's the trap. Take profits in stages. Don't try to time the exact top, just scale out gradually. And when those fast, ugly pullbacks hit, that's when you deploy your stablecoin stack and start buying the dip. As I always recommend, maintain a reserve for short-term trades. Taking profits regularly on those positions keeps you mentally balanced during dips. It lets you stay calm while others panic. That's your edge. Buying smart when the crowd is dumping out of fear. The round trip from green to red is brutal. Don't be the one left holding the bag. Be the one locking in gains while the rest are chasing shadows and praying for a bounce. Keep your eyes on the Fed. Their next meeting in June could either extend this rally or introduce some chop. Either way, you'll be ready. If the global M2 model holds, we could see a temporary top around July, maybe near 130K for Bitcoin. It's not guaranteed, but it's a realistic scenario based on current data. Everything is aligning. Weekly technicals look strong, liquidity is rising, macro conditions are stabilizing, and institutions are stepping in aggressively. These setups don't come often. If you're already positioned, stay focused and stick to your strategy. Don't get shaken out. If you're still on the sidelines, this could be your last clean entry before things go parabolic. Many altcoins are still lagging and could catch up fast. Just last week, FTX announced its second round of distributions. On May 30th, over $5 billion in stablecoins will be returned to creditors. With altcoins still down 40 to 50% from recent highs, this fresh liquidity is likely to rotate into the altcoin market. Smart money knows where the discounts are. Remember, we're no longer in the early innings. It's time to lock in, have a clear strategy, and stay aware of everything happening around you. To help with that, I recommend following us on X. We regularly share on-chain trends, technical analysis, and key macro updates. Hope this video was helpful. Thank you for watching, and I'll see you in the next one.